Hey, good morning. Good morning. This Terrence Ray. Got another video for you how to trade. Gonna be focusing on, just some basic stuff. So if you're new to the market, my channel is definitely the channel for you. You don't have, this ain't if you're experienced and you still can get something out of it. Now, I'm still gonna be doing stuff that pertaining to the market that everyone can identify with, but if you're a beginner and you're looking for, just some basics and you're trying to learn how to get started and you don't want to pay somebody a whole bunch of money to teach you stuff that's basically on the internet for free, this is the channel for you. So we're gonna be going over some stuff. I may even place like a little cheap butterfly today. We'll see. We're gonna talk about some about the FOMC, and we're gonna do some charting and a whole lot more right after the buffer. All right, we got about got about 4 minutes before the opening bell. Right now, today I'm on the TastyWorks platform, and if we're looking at I'm gonna pull up the S&P 500 futures, which are first thing for me, um, you're a newbie. First thing for me when I wake up in the morning, I look at the futures, and you may say, why look at the futures? The futures is going to tell you like what's going on in the market um overnight. So I can already see that the market is going to open down. And if you look at my watch list, so I got the VIX, which is measuring like volatility. So you can see the VIX futures are up and the VIX is going to open up. So automatically that lets us know the market should open down. The majority of the stocks will open down. That doesn't mean that you won't have some stocks that'll open up, but the majority of the market should be down. The S&P 500 futures will be down. So that means that the SPX or the SPY should be down. NASDAQ futures are down about 1%. All the major futures are down about 1%. Russell is down, which is your small to mid caps. And the YM, you see that /YM, that's the Dow futures, which are down. So that's the first thing I look at in the morning. And then I look at the bonds. Um, a lot of people say, so go to bonds, so go to market overall. So we got ZB, which is I click on it, your 30-year treasury bond. ZN, your 10-year treasury note. You see they're both down. Oil is down. And we even have gold down and Bitcoin is down 2%. So um, we should open down. So you basically should, whatever portfolio you have, expect to be, if you're long stocks, expect to be down. And so that's the first thing that I would do. Let's see how much longer we got for the opening bell. We got about a minute. So um just right off the bat, just looking at this is something. Now I'm by nature, I'm a contrarian. Like I want to do the opposite of what everyone else is doing. I know that seems kind of crazy. You say, man, we're gonna open down. So you mean to think like, yeah, I want to place a trade to the bullet or to the upside. Because look, if the market is already down, I don't want to get short here. Now it could now tomorrow we should get the decision of the FOMC. They just basically gonna decide whether or not to we know they're gonna raise interest rates for the most part. That we just basically, is it gonna be 50, 75, or another 100 basis points at this point? And there is a website online. There we go, got the bill. And so now you can see over here to the left, you can see these stocks are open down. Now these are the ETFs of these futures right here. So if I want to look at the overall market, and I just come over here and click on watch list and TastyWorks, and then I could come over here and I'm on the fast movers, TastyWorks, fast movers, and we can see. and then I can arrange this. And out of all the fast movers, only like three of them opened up. And so I can look and see and arrange this. The majority of the market is down, right? Amazon is down, AMD down, Amazon opened down 1%. So these are your FANG stocks. Amazon, you can see, um, let's see, let's take a look at Apple. I don't see it over here on fast movers. There you go. So you can look at Apple. Now, I normally have them added to this watch list. I probably will just so I can just scroll and we can see Apple open um, down 1%. Now, today, I don't expect the market to move a whole lot, being that we're going to get an interest rate decision tomorrow. So we'll probably have an inside day, in my opinion. And I could be wrong, but I don't expect us to get a whole lot of movement around here. What you're looking at is, if you see these lines on the screen, these are Fibonacci retracements. And all I did for here, I'm just plotting out this little impulse move to the downside. Honestly, I do expect the market. I'm normally a bear, but I do expect the market to go up. And you might not because of any news or anything like that. Just going by what I see on the chart. Yeah, this was an up move right here, and we just seen like a little down move within that retracement. So in Apple and in Amazon the same. So we'll see. Um, let's see. One of the stocks that I do like that I've been watching is DraftKings. Um, because I've been placing little bets with football starting and fantasy football, and this is one of the ways to kind of track that. DraftKings, I think Penn. Even though I use Prize Picks, I don't think they have I don't think they have they're on the New York Stock Exchange or anything like that, or a public company. But we got XOM, we got oil. See, oil is on here down about 0.5%. You might as well say Lyft is up. So we got Lyft up almost 2%. Now, more than likely, there was some news to get a move like this. So this may be something that if you want to get bullish, this may not be a bad trade. It's only a $16 stock. We got an IV rank of 43. Could this be something worth selling a put in? Let's take a look. I want to see what the premium would be like. If I've sold a put in this, and this is pretty much what I do. Just going through stuff and looking to see a 30. I would come to now if I'm looking to see what month I would like to sell an option. I see I got a viewer, but if you want to comment, I'll open up just to make sure I don't miss any comments. So I would come to the front month, October, which is 31 days. And then either 31 days or 59 days. That's what I would look for my range for my option, right? I would come in the monthly. The monthlies are more liquid than the weeklies. So, and I don't want to go quite 59 days out, but we'll see. Let's see what it looks like. And also, you see this purple line right here, which says November 1st. We got earnings on November 1st. So I want to avoid earnings. I want to come and place the trade before earnings. Excuse me. So I would come 31 days. And I probably could collect a buck right here if I sold the 16 put. If we sold that put right there, collect 115 in premium. And it's only gonna margin you your buying power about 200 and it says 84 bucks right now. I like that. I think that you can see it moving around, but so basically you're gonna collect you have the opportunity to make $117 versus basically buying power effect of like 280. It's almost you're collecting like a third of what you're risking, almost maybe like uh um right around that amount, right? So that's to me that's a good. Now the max loss, of course, it could go to zero, but To be honest with you, during football season, as much as people are out here playing fantasy and stuff like that, I like these stocks. Um, Fundamentally, they should be making money. I know they're getting my money, and a lot of the people that I know are involved as well. Now, let's see. Let's go ahead and put it on because the market is moving. You can see I don't want to study too long on this. I'm gonna come in at 125 at the high end and see if I can get filled. Let's see. May have to motor it down. So this is me working the order. See, we got a bid ask down here of 107, 125. I want to get filled for as much as I can. So let's do 121. Let's see. Nothing. Come back over here. I'm gonna right click, replace. Look like it's getting away from me. So let's see. If I would have just took the 115 earlier, because it's actually moving. So let's not play around with it. Because I lost out on let's see. I'm not gonna motor it down any more than that. Unless I just let me see. I want to take a look at I'm gonna load up another one of my charts. Looking at this. Now, this one right here, you see I got it called chaos. Generally, I would not I would not get I like to see I'm just being honest with you guys. Like um this right here, I would like to see this green and go with the momentum, but I don't have it it's down, it's red. So technically, this is telling me that the market's gonna go down some more, according to this, right? But I do like selling. I do like getting long in the face of why it's coming down. And I'm not getting filled right now. So let's see. Let's penny it down. I like to put trades on while I'm on. So since I'm on and I'm working, let's see what we can get. 109. You can see right here, right around. So when the market first opens up, your bid ask spreads are going to be widened out and you can see it tightened up as the market is getting open. So it kind of is settling in. So this is probably the right price for what I'm trying to do. No, with selling a put, worst case scenario, I just get put stop, right? But what I'll do is if it comes down and then it tests this position, I'll probably roll out in time and buy and collect more premium. That's, you know, selling puts on cheap stock is really easy to manage. Let's go to 108. I can't get filled there. This is ridiculous. Um, so this is what I'm gonna do, guys. I'm not gonna chase it. I'm gonna cancel this order. You may say why? Because I pennied it down, pennied it down, pennied it down. So you gotta look at it like this: whatever you give up to get into a trade, you probably are going to have to give that up and a little bit more to get out of the trade. Now this trade could go bounce, and then I'll be like, man, I should have took that trade. But that's okay. Don't chase trades. I wanted to put the trade on. I couldn't get the trade. I'm pennying it down. I think I started at like what 120, came all the way down to 108, and it's still coming down, and I can't get filled. So I'm not gonna chase it. We're just gonna I'll continue to look for something else. Let's go. Let's take a look at um let's take a look at Snap. See if you look at these stocks, they all look like they're almost like they're just flatlining. Let me make sure I put my you see? And so it kind of looks like DraftKings. Let's take a look at Roblox. all these little what you would call metaverse stocks. Roblox is hanging around right here. See, if we look to the left, we got a little support right here in this area. Let me change this up, make this look a little different. Got a little support right here. So you can see Roblox is holding. If we look left, it's one of my things when I'm looking at price action. I always look left to see where the support may be. Um, what's something else that let's take a look at ARC. So we can see I don't think we'll get a whole lot of movement today because everyone's gonna wait on the FOMC. But what we can do, because I want to put something on. Let's take a look at the SPX, right? I like to put my little butterflies on. Let's see. I don't have it saved here. I'm gonna bring up my other chart. Go back to my active trader chart with just my one line up here. All right. So right here, what you're looking at, if you look at this green line right here and this red line, this is the expected move for the week. And I find that just by going to the Friday expiration, which would be September 23rd, 3 days. You see where it says 107. If you add that 107 to probably, matter of fact, all you got to do is just come right here. So you can see it's right around 37.45 to the downside, 39.60 to the upside. And that's right around where I'm at. See 39.60, 37, I got 38. So somewhere right around in here is where the expected move is for the week, for the rest of the week, even with the FOMC factored in. So I'm gonna see if I can. How much would it cost to try to pin a see if we can try to pin a butterfly there. Put a little cheap trade on. Um, let's do it like this. Come right here, and I like to put the short strike. I actually like 39.50. You know why I like 39.50 is just because I already see. I'm looking over here and I see open interest, and you see that. See, we got almost you got 4,000 contracts right there, and you got a lot of open interest right here in this area. So anywhere, any one of these. So we'll stick with 39.60. I'll click right here. Matter of fact, the easiest way to do this is to come up here and sit and select butterfly, change it over to call side. So I'm doing a long call side butterfly, and I'm gonna hit go, and it's gonna automatically put it there instead of me having to. Now all I gotta do now is just move them down. And I could do that just by hitting down on the strikes. You see it moving. I'm just moving it on the call side. I'm gonna put it right there on 39.60. I actually think I may go, yeah, right there. So you can see right here, it's only gonna charge me what? I can get one put on for maybe 5 or $10. It's a $5 wide butterfly. So if I pay $5 for it, $5 meaning $500, right? So if I pay 5 or 10 cent for it, then that means I could make 490, 495 on the actual butterfly. So this is just something to put on. And if the market rallies after the FOMC and rallies up here, I probably, unless you hold it to expiration, which would be Friday, right before the end of the bell, that's the only way you probably would make max profit on it. I'm not gonna do that. If it was to rally up here, you probably could get out of it for $60, 50, 60, maybe $70 tomorrow or Thursday. And you know something you only pay 5 or 10 cent for. So let's see what we can get filled for. I doubt I get filled at 5. It won't even let me put that price in. Let's try it again. Why won't this won't let me? That's weird. For some reason it wouldn't let me put that. Let's try it again. I'm not quite sure why it wouldn't let me put that in. Let's try it again. Net debit. There it go. And probably won't get paid. I probably won't get filled for 5 cents. Let's try 10 cents. Boom. So basically, I paid $10 for this trade with a max profit of $490. And so I like to do these. Now these what I call like little lottery tickets. Now, if you're looking at this ruler right here in the middle of the chart, this is the expected move. And I've only seen this on TastyWorks. You'll only see TastyWorks has this. This is something that they do, and they calculate their expected move. They have a certain way that they calculate it. I think they use like the at the money um, straddle, and then they come like the next out of the money, and then like the next one after that. Some kind of formula they use. You can find it on Tasty Trade or on TastyWorks how they do it. You go to their website, but and then that's how they get this right here. And so it's pretty accurate. It's pretty accurate. Um, and it should be accurate, I want to say 68% of the time, like one standard deviation or something like that. So it should be accurate 68 to 69, 70% of the time. And so if you can get the market to, bounce around in here, you can get lucky. You only got to hit these maybe one out of four times, one out of three or four times to pay for itself and make a little money out of it. And if you're good with picking direction, you know, you can make a little money off these cheap trades. So guys, that's that. Like I said, I don't expect to, we can see the market moving a little lower. Um, but you can see basically, I'm willing to bet that today this candle closes inside of this candle, which would be what we would call a harami. I'm willing to bet that. And if this body of this candle closes within the body of this candle, I think that's what they call a harami. And they Japanese candlesticks, they got it. I want to say the book I read by guy named Steve Neeson. They also call this like a pregnant woman or something like that. So it basically is just where, let me see if I can find another one. Where you have a large body candle, and then you have like the body of this candle closes within the body of this candle, like this. And and that's look like what it's setting up. So generally, when you get those, yeah, the next day is something where you get the big move either way, and that's what this is setting up for. And I had no like for me to pick like bullish or down for my butterfly. I really didn't have like I just picked one, right? I figured that if we had this gap down and we here, that is setting up, for a little move here. I could be wrong. But I'm willing to throw $10 out there just to put something on. So if you're sitting here watching this video and you're getting something out of it, hit the like button, subscribe, please, and share it. Let's take a look at Bitcoin. Bitcoin down 2%. If you notice, most of these charts look similar. You see Bitcoin made a low, took out this low. This is the area right here where Bitcoin has been holding. And this is what, right around 18,000. Bitcoin has been holding right here. If Bitcoin breaks that 18,000, we could be off to the races. Let's look and see. I don't know if that chart go back that far. It won't let me go back any further than looks like a year, because I wanted to see what it looked like. Oh no, hold on. Let me go scroll. All right, I was wrong. Let's close this up. So let's take a look at, let's go 3 years and see what Bitcoin. Let's do a weekly. Yeah, it won't. I don't think it's gonna let me go back any further because I wanted to see Bitcoin. I wanted to go look left and go back far to see what kind of support we have back here. But I don't know if you guys follow Richard Hart. I follow Richard Hart. He got this coin called Hex coin. And yeah, I got some Hex. I guess that makes me a Hexican. And he's pretty accurate. He's one of the smartest guys I've heard in crypto, in the crypto space. And so he's saying that crypto gonna get all the way down to 11,000. So not crypto, Bitcoin. And so um, I'll roll with that. So I'm waiting on Bitcoin to go down some more, and then I may get long it. You can trade it on here, and you can trade Bitcoin on here right as of right now. Now I think um TastyWorks is working on getting. I think they're gonna have their own wallet and stuff like that. But right now you can just trade it for cat like with your cash, like in your, so you don't have to convert nothing. And basically, I can show you guys. Come over here and hit trade, hit crypto, and you're gonna see you bring it up like this. And so you see I got it say Bitcoin, Ethereum, Cardano, and Solana. And you can just come down here about like $100 worth. You can change the amount, $200 worth, $300 worth, $400 worth, you know, and it's gonna buy like right now. You see it says $100. You'll buy like $100 worth of Cardano, and it'll show you like your estimated quantity of how many, and you just trading it. And whenever you want to get out of it, you just come over here and just sell your way and just sell out of it. So you don't have to worry about um converting any coins. Now you can't, so you can't spend coins or whatever. So once you sell out of it, it automatically converts to cash. Basically, you just trading this almost like Forex. You can trade this like Forex basically, which I think is pretty cool. Now they are working on having a wallet come in the future. If you interested in getting an account with TastyWorks, I'm gonna have a link in this video down in the description, and then you can go ahead and click on the link and sign up and get you a subscription to TastyWorks. But basically, guys, so follow the channel tomorrow after the FOMC. I come in and I'm gonna put on a trade. More than likely, I'm gonna put on something in one of the ETFs, either the SPY, the QQQ. I'm gonna come in here and put something on tomorrow. Well, like I said, I just don't think that the market gonna do a whole lot today. I want to let them make their interest rate decision, which it'll probably be Thursday when I put the trade on though, because they're gonna make the decision around 2 o'clock. I do work. I got a regular job, so um, and so Thursday mornings is when I come on and I make my video. So Thursday morning is when I'll come on and probably put a trade on. Or if I put a trade on Wednesday, because I still may do it, then I'll post the trade on my YouTube so you can see it like a post, almost like a Twitter post. And sometimes and follow me on Twitter because I do charts. I'll chart and post a chart to Twitter. Like I do it from my phone, like if I see a setup or something like that. And that way you'll see whatever I'm tweeting about, you know. I don't get too crazy on Twitter. I don't really get caught up in what's going on in the world. I don't feel like I can change that anyway, right? So you may see me like something crazy, but that's about it. Most of my stuff is sports. You may see me share like who I think gonna win, or somebody do a stupid play, a crazy call, like in the Bears game on Monday night against the Packers. Where you literally need inches, and then you put the quarterback in the shotgun to run a QB sneak, and you only need inches instead of lining right up on the center, picking a side, and just go and get in and scored a touchdown. That was crazy to me. Yeah, you might see me tweet about that. But other than that, guys, I appreciate you watching, and I would be careful today, especially if you day trading. More than likely, there's gonna be a range day. So if you trade futures, you trade forex, make sure that You scalping. This is a good day to scalp though. Like, cause you're gonna get a lot of up and down action throughout the day, right? You see this harami? See this harami setting up? You're not gonna get. I don't think we're gonna get a lot of movement today. You're gonna get a lot of bounce around. So you trading forex, you trading Bitcoin, you trading futures. Take your little 10 ticks, 20 ticks, get out. Put you something on like a Bollinger Band or something like that. When you get to the high of the range, get short. Catch you about 10 ticks, 10 pips, get out. Buy it when it get down, buy it. Catch you about 10. Don't be holding these positions all day. And definitely do not hold positions through the FOMC tomorrow. I'm talking about scalping and like day trading. Options, stocks and stuff like that. You swinging, you don't really not too much. You don't really care, right? So that's that. And I will add on to some positions. You'll see me have some stuff on Wednesday and Thursday. So guys, with that, I'm gonna get out of here. Peace.